So I want to welcome everybody to the Friday Independent Living Skills Session. My name is Catherine. Quick visual description for those who would benefit from that. I am a white female in my mid-30s. I have shoulder length black hair that I'm wearing down today, and I have a navy blue and white striped top on. And I am coming to you from our office here at LVCIL that is in downtown Allentown. I'd like to welcome and thank Ronald from Fulton Bank for being our guest this week and bringing this series to us. This is part of a 4-part series that's going to be occurring monthly, focusing on different financial topics. So we're very thankful to Fulton Bank for reaching out and giving us this opportunity. Quick logistics for today. We are going to record today's session. That recording and any links that are shared and Ron agrees to will be posted on the LVCIL YouTube page in the coming week. We invite you to turn on your camera if you're comfortable. Participants can unmute themselves at any point today, but we just ask that for clarity of the recording, you don't unmute unless you're going to be speaking. Captions are available through Zoom. You click on the CC Live transcript in the lower middle portion of the screen and select Show Subtitles. Chat is open for posting questions. I will do my best to monitor that throughout, so feel free to use that to ask questions, or if you're having technical issues, I will do my best to help you. And if you're joining using a phone or tablet, the captions and chat features may be collapsed and can be accessed by clicking on the icon of 3 dots in the lower right-hand side of your device screen. So with that, I will turn it over to Ron, who serves as the Workplace Banking Relationship Manager at Fulton Bank.
Thank you so much, Catherine. I hope everybody can hear me, and I'll wait for a thumbs up from Catherine. Okay, so I got the thumbs up, everybody. Good morning. Again, my name is Ron Glassic. I am a white male if that helps people without any hair. You know, there's only a few perfect heads in the world. The rest do have hair. So I will let that where I sit in the Bethlehem office on Shainersville Road. And as Catherine said, I am the Workplace Relationship Manager. I do financial wellness training, really hope to help people lower their financial stress and help them be more financial savvy. I want to thank the Lehigh Valley SIL and Brian for the great teamwork in setting this up and introducing me to Catherine, and her communication has been outstanding. So as we start today, I want to go over a few items that you may hear me talking about. Banking has a numerous amount of jargon, and I try not to make the jargon unrelatable. So if you hear me say PPA, it's really about a partnership, which we have a partnership with Lehigh Valley SIL. We have a plan, which the plan is always yours, the organization, your situation, your goals, and then obviously it's the action at the end. So we have PPA stands for partnership, plan, and action. And your action is really what we're looking to see you take advantage of these great opportunities that the Lehigh Valley SIL and Lehigh County community is offering. So the other thing that I want to talk about today's session is not to sell you anything. It's education, motivation, and then celebration. So as we start with the education piece, today's first of 4 and even more financial programs is about budget and savings. So I'm going to ask Catherine if she can bring up the PowerPoint with the budget and savings to go through that. And her system is working great. It just came up. So as we talk about budget and savings, I don't want to read item for item, but I want to basically tell you what is a budget, how do you begin it? It's money coming in, you have to know how much you make, and you have to know how much you're spending. So we'll share a budget sheet down the road, and I know we have them to forward out to anybody, but think about this. You write down what your income is for one day. As I started with my children, you know, literally put money in one side of your pocket on the right side. And at the end of the day, if you have money in the left side pocket, you have a good budget. If you don't, and you had to borrow money, you actually have to redo your budget and either carry more money in that left pocket or figure out a way to earn more. So if you want to go to that second screen, Catherine, it flipped back to the first. There we go. So again, determine how much money you have. Again, daily, weekly, monthly, and you can break that down then by number 2 is what are your expenses? And your expenses that are what I consider non-negotiable is probably your rent, your monthly bills for utilities. There's things that you can't change. You need to have electric, you need to have water, you need to have your rent or your shelter. So they're non-negotiables, but you still have those expenses. And as you subtract that, if it is in the color black, that's always a good thing. That means you have a positive cash flow on an accounting sheet. It'll be there. But if it's that red color, we might like the color red, but it is not good on an accounting sheet or a budget sheet. So we really want to make sure that if you have a negative, what can you do? So where do you start? You go back to step 2 and look at your expenses. It could be you're stopping in at a Dunkin' Donuts or a Starbucks for that, coffee latte with whipped cream and a cherry on top that's costing $6 and $7 a day. You may want to say, how can I cut some of my internet expenses or cable expenses? But whichever is your plan and whatever fits into your goals is how you can control some of those expenses. And that'll help you go from red to the black and have a positive cash flow. Flip the switch. Flip this page, please. Thank you. I love this slide. This is close to my heart, and we really talk about paying yourself first in a savings. The reason I say that is we work, very hard every day, every week, and if we get paid weekly, bi-weekly, daily, I mean, there's people that get paid at a job every day if they work different random jobs for different subcontractors, or if you have a monthly income coming in, you wait for that income that you get from the state or the government or your employer. And when that comes in, I think it's a mental thing that I say, pay yourself first. You take $5, you take $10, and you say, I am paying myself first. And you put that in a savings that you can get to, or you put that in a secure place that you will be able to access it and know that it's peace of mind that I have a little bit of a savings built up, because we always try to build up a 3 to 6 month emergency fund. But what I go back to is if you pay yourself first, you feel good about it. It's like exercise. It's about eating healthy. It's about drinking enough water. Whatever that plan is, whatever your goals are, it's consistent. It's putting it in play that you do this on a daily basis, and it then becomes your norm. And when you miss it, you say, oh, I got to make sure I pay myself this week. And again, it's all that kind of items that we talk about. What I will say about savings, where people will say, well, I can't save. I cannot save money. I don't know how to save money. And I will tell you, there's a 52-week challenge. And I stress this, and I will pass this over to Catherine if it's not in our PDF files or filter today. And the 52-week challenge is saving $1 per week and increasing it $1 per week. Now that doesn't sound real hard. The first week you're going to put $1 away. I can do that. Next week you're going to put $2 away. I can do that. It comes when it gets to week 52. Can you put $52 away this week? But again, as you do that through week 1 through 6 and through 10 and through 16, it becomes, I am looking for ways the day before to how to get that next week's savings up to. And I'll tell you now, that total will be $1,450 at the end of that 1 year. And then you say, I can't save? Well, yes, you can. Now you have a little bit of a savings and a cushion, and it just keeps on building. And that's why I really tell people we can save money. We can do things to help make you less financially stressed and more financially savvy. Okay. Next, please. Thank you. As I just said, and I know I don't want to read this word for word, as I said, successful budgeting takes time and persistence. It takes being consistent, persistent, and moving forward to say, I see that number, I see my savings growing, and I want to continue to do this. And as you pay yourself and you build that up, you always help yourself have that emergency fund and security. But what also does, you can find ways to reduce your expenses. People will say, how do I reduce my expenses? Well, as I said in the beginning, it could be not going for coffee at Starbucks or Dunkin' Donuts and making it at home. It could be packing a lunch instead of always buying lunch on a Friday or certain things. Uh, I love going out to eat, but it's very expensive, as we all know. And there's ways that we can say, how can we help lower this, our expenses, I should say, for the week? Well, let's make that pizza at home. Let's make some food at home and even have leftovers. There's so much things. I think COVID, not that there was a whole lot of good things about COVID. I'll agree with everybody at probably, because either raise a hand or a smile. But the one thing I found out when I was at home working, doing a lot more virtual presentations, I looked around at things that just sat there and I didn't touch them for 3, 6, 7 months, and I'm thinking, well, why would I even need that? So not only can I declutter, but I started selling things on Marketplace or on these different social media things, and it was extra income. My wife thought, well, I'm going to come home and we won't have any furniture. But honestly, we cleaned things up, we declutterized, we put a little pile together and just started selling things slowly. We were making some extra money on things that we really didn't use, we didn't value. And when I talk about that, it's what you value. Remember, we are a partner, but it's your plan. So when your plan is that you say, I value a savings, I value making sure I have shelter over my head and I can pay my utilities. That is a great value. So you want to build what's important to you because it's your value. My value is to make sure I have a reliable car because I travel for work. So I need to make sure I have that. And that's always one of the things that I make sure I check my oil, make sure you check the tires. But it's a value to mine. Obviously, our staples are our health, our family, our religion. Any of that stuff is your values that should be non-negotiable. So next, please. Now, when you're building your budget, as I said, it's your plan. When a rule of thumb is 60-40 rule, and that's the 60% is things that are essential. And we touch base about your home, your shelter, your lighting, your utilities, your healthcare. That's non-negotiable. We need that. You need that to survive. Shelter over you, your utilities have to be on. Do you need cable? No, we don't. We people know now you have the access to the internet, and that could be your YouTube videos, whatever. But the 40% that's remaining is where you have the greatest opportunity to either save money, save expenses, spend on things that you value, both short-term and long-term money. And we'll get into a little bit more of that in later presentations about retirement and securing funds. But again, that's just a 60-40. So 60% of that first number, income, is going towards your non-negotiables, and the other 40% is towards paying yourself first, things that you can do. So next, please. So when we talk about a basic savings account, you remember when I said you put money aside and pay yourself first, but please understand you want to make it accessible. You want to make sure that you can get to it, that you can say, if I do need it next week, because we all know we have emergencies, we have breakdowns, we have things that we have to get, medicines, whatever they are, you don't want to have to be putting them on a credit card that you can't pay off and charging them on bills or taking payday loans. You want to honestly have that secure fund, but you want it accessible. So we call that liquid funds or easy access funds. Other terms of savings are certificate of deposits. We say CDs and everybody thinks it's still that music disc that you put in. Now I'm really dating myself. So now you not only know that I don't have hair, but I know I'm a little bit older when I call a CD a music disc. But the certificate of deposit is a time deposit termed savings tool that banks and financial institutions offer. So you'll get a better rate than you will in a regular savings or money market, but it is also a term that you can't touch it or you'll have a penalty. So why would you want to put some money away in a CD if you can't get to it, or you're going to pay money or a penalty to get it? So we always tell people, build your 3 to 6 months savings first. When you don't touch that money for the next 2 to 3 months, take 3 months of that and put it in a CD, earn a better interest rate. We even talk about laddering of CDs because that helps build you having the bank pay you on your own money. which is interest. Most people remember or relate interest to what they're paying on their credit cards, what they're paying on their mortgages or their car loans, but also interest can pay you. Now that interest rates are going up, banks are paying a greater return on your money that's sitting there. So think about that. Put money aside, build that savings up, and the bank will pay you some more interest on that money that's sitting with them. Long-term investing, we'll talk more about that in our retirement planning. Next, please. So establishing that, remember, commit to a certain dollar amount. Pay yourself first. And I go back to that because it's such a reward, and you'll see what I mean when you do that consistently. If you get a raise or you have a different income level that jumped up for a windfall of money come in, take a portion of that, pay yourself first by putting in your savings, building enough up for your 3 to 6 months. But when you pay yourself, if there's a thing that you want to treat yourself and enjoy, do that, because it's always about that mental aspect of this. People that struggle a lot of times with financial matters are the ones that say at the end of the week, I don't have any money, I paid all my bills and I'm still negative. And it's just a domino effect, but a negative domino effect. And I want to make a positive domino effect for you. So make savings convenient as possible. Payroll deductions are good. Automatic deposits are good. Automatic bill pay of your essentials are good, but I never recommend making automatic bill pay on the non-essentials. And what I mean, don't give somebody access to pay that credit card. And I apologize if you lost me because my screen just, there we go, I'm back. So I thought I didn't move my mouse long enough and I was disappearing. So as I was saying, don't make your internet or maybe your Amazon automatic pay, because it's very hard to stop that when there's mistakes. And I think I rather control when I'm going to pay somebody as long as it's paid on time. And again, that's financial discipline. So moving forward, Catherine. So here's just again, rule of thumb. Some Americans are in different savings areas. Some Americans are in different categories, but you can look at your age and see, where should I have in my 401k? Maybe you don't even have a 401k, but it's also known as a retirement. It could be an IRA. It could be just your savings account could be an annuity. It could be all different subjects or products. I shouldn't say subjects, but products that you have your retirement savings in. In this slide, it says 401k. So average, median, and it's all across the board. And I've honestly said I worked with people that work part-time and are more financially savvy than the CEOs at some large institutions, because sometimes the more they make, the more they spend, and they don't understand their own values of what are they paying? What are they buying that really has value to them? Where that person that's part-time and understands their dollars that come in, they're more savvy about it. But this is not to judge anybody. This is saying this is what the Americans have saved in a median and average balance. But remember that 401k, you may not have a 401k. You may have just an IRA or a trust or an annuity. There's so many products which will be more shared in retirement planning sessions. Next. So again, I don't want anybody to think that this is something guaranteed, but if you're in your 30s, they say you should have 1 times your salary. If you're in your 40s, you should have 3 times your salary. You know, there was a day when I was in my 30s that it was a struggle to make sure I had that, because children, expenses, repairs, breakdowns of the car, heating systems. We are no different because we're bankers and we sometimes wear a shirt and tie. And now that we can wear a t-shirt instead of always a dress tie or a 3-piece suit, I like the fact that I don't have to go out and buy suits and I don't have to worry about that. We're down to earth people. We have struggles and expenses. I had to put 2 children through college, so we're no different. So you build that up and you try to say, how can I make sure that at least I have 2 times my salary or 3 times my salary when I get to that age 50 or 60? And you build that up to say, I want to have peace of mind, put your head on your pillow at night and sleep a little bit more comfortable without stress, without financial stress. Next, please. So how does Fulton want to help you through a workplace banking? Now, there's a QR code there that you could take a picture with your phone, and it does work. We tested it. But we're going to throw you $200 to start that savings, and it's banking with Fulton to say, this is just really talking about how you can help. And it is a total free account. And I want to make sure we stress that, because everybody says they have free accounts. Well, if you don't give your firstborn your blood type and you stand on the head in front of an ATM, it's not free normally. And then they nickel and dime you. This has zero minimum balance. So you can take your account down to zero, because we know you need your money, especially if you're working check to check, which 65 to 75% of Americans are now working check to check. So we understand you need your money. So you don't have to leave $200, $300, $500 in the account on a regular basis and get a fee. This is a zero minimum balance. By opening an account and taking advantage of being the partnership that we have with the Lehigh Valley SIL, you can take advantage and get a $200 bonus. But I'm not going to go into great detail. The QR code will take you there. You can reach out to my contact, and I'll put you in touch with a financial center manager that would help if you need one-on-one bank products and services. But what else does it do? Next. We talk about the proper cards. If you have a plan and you walk into a financial institution and the first thing they talk to you about is selling you a credit card before they know you're a financial institution, that's probably a sign that you want to walk back out. You really need to make sure that somebody's not there selling you anything, that they're asking you, what are your needs? You may have a need for a credit card. Credit cards can help you control your cash flow better, but credit cards can also hurt your cash flow big time. So we understand that we have great discounts. We have great products for that. We also give mortgage discounts with this product. We also help people with health savings accounts, which is basically a triple taxation savings if you take advantage of an HSA and your employer has a high deductible savings account for health products. But we'll go into more detail about that on a one-on-one basis. And then I always think a personal financial checkup. So where do you stand? Well, I stand probably different than Catherine. Catherine stands different than Debbie. We all are different situations in our lives, in our phases of our life, but a professional would be a good person to start with for a financial review of your checkup. What do you have in retirement? What do you have in your savings? What is your home value worth? Can you have equity in it? Do you have equity in it? Are you paying more on a credit card interest rate than you're earning in the bank CD rate? You're losing money if you're paying interest on a credit card and you think that you're making money in a CD, because if it's less, or if the CD is 3% or 4% and your credit card's 10 or 12 or 19% and you're carrying a balance, you're losing money. And we want to help people understand how you do that. Now, that doesn't mean you can pay the credit card off immediately, but you want to understand, put more on than the basic. So these are all tools that we offer through this, what we call workplace banking, our team advantage banking account that we offer our partners, which Lehigh Valley SIL is. Next, please. We also do the easy online or phone mobile banking through Zelle, transferring, very secure. Online banking, very secure. People say, well, I don't like using my phone or my internet for my banking anymore. Well, I will tell you this, more and more mailboxes are getting broken in. There's more scam emails, scams through the postal service. You don't get your bills, you get late bills. Online banking and transferring money from person to person is a lot faster, safer than it has ever been before. The technology has gotten advanced. We are very comfortable in promoting online banking, bill pay services to set up the right way. So I want to just touch base on that account, because people think, oh, I need to drop in a whole bunch of money. This $200 promotion, you don't have to put any money in. You can use a debit card 15 times in 60 days and still get that $200 promotion. So you don't really have to have 300 or 500 to open it up. You can open this account, use a debit card for money that you do put in, because you can't use a debit card if there's no money in that account, just so you understand that. I've always got a kick out of one of the signs I have in my office. How can I be overdrawn? I still have checks. Well, just because you have checks doesn't mean you have money in your account. But again, this is why financial education is so important in today's world. We want to educate you. We want to hopefully motivate you to do the right things and take the action, and celebrate by giving you these products and services that are there to help you. Next, please. And that might have been the last one. I do have a slide for, I think, the identity theft, which I just wanted to touch base on it. That was in our second screen, Catherine.
Okay, let me pull that up for you.
Okay, thank you.
You're welcome.
There we go.
All right.
So identity theft is real. If you talk about financial stress, you have identity theft, you're going to have financial stress. And as I said, there's things called dumpster diving, where people literally look through people's garbage to find information on them and pull out credit card bills. And yeah, you may say, well, there's only 4 digits on it. Well, that's 4 more digits they have of your account, and they will spend days, they will spend hours, days, weeks, months figuring out what the other numbers are. And as soon as they get maybe your name, maybe your address, maybe your phone number, a little bit of your credit card, that's why they do dumpster diving. Maybe as I said to you, the mail theft, checks that come through the mail, people steal on the first of the month because Social Security used to get delivered on the first of the month, and now they randomly send at different times. The telephone scams, the phishing, spelled phishing, is different than you going fishing for a trout or, salmon. That is the people that call you and say, your son or grandson or grandchild is stuck in prison. Can you send us $200 to pay their bill? And you're like, what? Well, a lot of grandparents would do that in a heartbeat because they're afraid that their children or their grandchildren are being detained, and make the phone call, check on that, because it happens. Online scammers, making sure you have the proper software. It's every day. Our banking team that works in technology comes out with more and more people trying to figure out how to scam people instead of doing a full day's honest day's work. And we're trying to help and protect everybody. The social media, another way that they are finding information about you. It's all right to share what you've had to eat, but it's not always good to say where I'm going on vacation for the next 2 weeks, because now you're not home and everybody knows you're not home. And if you didn't stop your mail, or you have mail sitting in the mailbox, somebody's going to go to that address and just pop open the mailbox, and they could get 1 or 2 weeks of mail because you're telling everybody you're away from your house for 2 weeks. It's nice to share, but make sure who you're sharing with is not the people that are going to be taking advantage of that. The limited access to your info, or limit your access to checking your credit reports. You get a free credit report from the 3 major credit bureaus every year. You don't need to check them every hour, every week, every day, every month. I'm not a big fan of the person that says he drives around with a Social Security number on the side of his vehicle, and then you pay $29.99 a month for that. You should be able to check your credit report through annualcreditreport.com. And there's only 3 agencies: TransUnion, Equifax, and Experian. So don't buy into that, oh, we have a blend of all these. Those are the 3 credit reports. They have been the 3 credit reporting agencies. They're not changing. I've been in banking for 22 years, and it's still TransUnion, Equifax, and Experian. So those are just some hints. On the back side of this page is another rule of thumb. If you keep on scrolling down, you probably see where you may want to be in the 20s. As I said, doesn't mean you have a 401k, you might have an IRA. Maybe in your 30s, you think, should I create a will? Well, do you have family? Do you have children? Are you going to have life insurance? Life insurance is something we talk about down the road in financial planning, because life insurance isn't for you, it's for the people you leave behind. I will end on this story because life insurance is very important. I'm not selling it. I'm not licensed to sell it. I'm not even going to tell you that who you should deal with, but make sure you have proper coverage. I lost my father at a very young age. He was 52 years old when he passed away. My mother still lives in that same house that they built and worked hard for to build because they had the proper insurance. When I go to my mother's house and she's in her late 70s and I see her living there in her own home, it's because they had the right partner. And that partner was an insurance person that put them in the right product, that when the unforeseen came and happened to my father, my mother could live there comfortably. That's what really life insurance is about. And you have to check with your financial person that you're working with to say, do I need this? How much do I need? Because you could be overinsured. There's no reason that some people need millions of life insurance, you know, but you need to make sure that you can make sure your bills are paid for that person that you leave behind, that things are comfortable if you have a person that relies on your income as much as theirs. So those are the things that I talk about. And that's truly what financial wellness has meant to me. And that's why my passion is there, because I can see it and the happiness on my mother's face when I go to her house to see her living there. So with that, I am done. We have great products and services here. I am proud to work for Fulton Bank, and thank you again for the great partnership with the Lehigh Valley SIL, Brian, Catherine, Debbie for joining us today. Thank you all. We did pass out savings books. They're workbooks that you can walk through. So please ask one of your partners, one of your clients, if they would like one of them. We can provide them for you. Very simple read, easy read. And again, it's about building a consistent, persistent savings plan. So that's what it's about.
Yeah.
Thank you again. Thank you to the Lehigh Valley SIL. I look forward to these opportunities to just help people lower their financial stress and improve their financial savviness to have a life better banking world.
Oh, thank you. We appreciate it. We are looking forward to having you back in a couple of weeks, December 9th for our next session.
Very good. If I don't see anybody before the holidays, good luck with your pie sale. We're going to push for people's pie sales. I already I plan on putting an order in. I have to check with my wife. What is she baking? How can I help her not have to bake? And we'll just buy them. So good luck with that. And as I talked to Catherine, congratulations on October was National Disabilities Employment Month. And when I seen some postings today, I was really glad to see that we're doing this in October. It just is a great way to round it out.
Yes, indeed. Thank you so much, Ron, and have a good weekend, and we'll see you shortly.
You got it. Bye-bye now, everybody.
Bye-bye.